What's up everyone, welcome back to my channel. I am Tobi, and today's video we're going to be having a tax professional on this channel. She's going to be talking about Canadian taxes. She's going to be talking about tax deductions, benefits and all that fun stuff, tax credits and things like that. So all the quote-unquote free money you get from taxes, she's going to be discussing all of that and probably answering a lot of your tax related questions. So stick around and enjoy this video. Don't forget to smash the like button, hit the subscribe button so you don't miss my videos, and I really appreciate it.
Hello Tobi, thank you so much for having me on your channel. Hello everyone, my name is Justina. I am originally from Nigeria and I have lived in Canada for 10 years. I am a trained tax professional who has experience working with individual taxpayers and small businesses.
Can you talk a little bit about the Canadian tax structure, the different forms of taxes we pay and things like that?
Oh yeah, definitely. So this is good because we get to debunk a lot of myths about the Canadian tax system. So first of all, Canada is a progressive tax system, which means the more you earn, the more taxes you pay. Canada's taxation year is the calendar year. So for example, 2020 income tax return preparation occurs in 2021, and the 2020 tax year runs from January 2020 to December 2020. You file for a tax year after it ends to ensure you capture life situations that would affect your income tax outcome and benefits eligibility. And there are different types of taxes a taxpayer can report. So we have employment income, business and corporate income, capital gains, which comes from the sale of an asset like a rental property or securities, which would be like stocks, for instance, right?
Yeah.
The Canadian tax system requires taxpayers to file a federal and provincial tax return, which helps the Canada Revenue Agency determine if a taxpayer is eligible for federal or provincial benefits. However, if you earn no income, you still have to file an income tax return, claiming zero income earned in order to claim these benefits. Who should file a tax return? So every resident of Canada is required to file a Canadian income and benefit tax return. Why should you file a tax return? What's in it for me, aside from the fact that I pay taxes and it goes back into the welfare system, and it benefits me from that, right? Yeah. So filing an income tax return allows you to capture life changes that could increase your chances of getting an income tax refund. Who doesn't want that? Yeah. Or reduce the amount of taxes you owe and grant access to federal and provincial benefits. So I'll give an example. So example of life changes that can change a taxpayer situation are getting married or establishing a common law relationship where you live with someone for a 12-month period and you're not married. Moving for school or work, purchasing your first home, paying tuition, having kids, sale of an asset, etc. Those are common major life events that might affect your income tax outcome. Yeah. So this changes will determine if you're eligible for a non-refundable tax credit that helps to reduce the amount of federal tax and provincial tax you owe. If the total of how it works is, if the total of your non-refundable tax credit is more than the tax on your taxable income, the amount you owe will simply be reduced to $0. Some examples of non-refundable tax credit are basic personal amount, which everyone is eligible for, and there's a cap. First-time home buyers amount, tuition and education and textbook amount, tuition amount transferred from a child. A lot of people don't know that if you have a child who's paying tuition, you can transfer a portion of that tuition amount to your tax return. And medical expenses and charitable donations. These are the basic ones, but there's a whole list, right? And it all depends on your tax situation. Yeah. And so the other part is when you file your income tax return, there are also refundable tax credits. Like I said, the initial ones I just mentioned are non-refundable in the sense that you don't get the direct monetary benefits. And these ones are the refundable tax credits where you actually get some money back, which is what people like. Yeah. So the refundable tax credits are categorized into federal and provincial benefits. So the common federal benefits are the Canada's workers benefits, Canada child benefits, GST and HST, and the common provincial benefits is the Ontario Trillium benefits. Honestly, it's a lifesaver for newcomers and people who are low to middle income earners who are just really trying to get by. I'll give you a brief overview of what it means because I know I just threw a lot of big words at the screen. So I'm going to start with the federal benefits. So I'm going to start with the GST HST benefits. So this acronym stands for the Goods and Services Tax and Harmonized Sales Tax Credit. It's a mouthful. That's why they're shortening it to GST and HST credit. And its purpose is to offset, at least in part, the amount of GST and HST you pay in a year by individuals and families with low to moderate income. So for instance, like, let's say I live in Ontario and there's like a 13% GST HST credit applied to anything I buy. So if I purchase something for $100, 13% of that is $15, I'll pay $113, right? I don't think the government wants everyone coming with the receipt of every individual item they purchase, so they created this rebate to apply to low to middle income earners. So when you start earning above a certain income, you're not eligible because it's not applicable to people who are well off. I don't know, nobody's really going to say no to additional money, but it's created for people who really need it, right? Basically, you need to be a resident of Canada, you need to be at least 19 years of age at the point in time when you receive that payment, okay? I'm just listing the most important benefits that people always ask about. And then moving to the provincial benefits. Actually, there's one more federal benefit that I think will really apply to low to middle income earners. So the Canada's Workers Benefits, is CWB, is a refundable tax credit to help individuals and families working and earning low income. You are eligible for this benefit if you're earning a working income, you're a resident of Canada for income tax purposes throughout the year, which is what we already explained at the beginning, and you're 19 years of age or older on December 31st, or you live with your spouse or common law partner or child. And obviously, this is all dependent on like the capped at a certain amount of income you're earning based on your net income. And it's important to note that you are not eligible for this benefit if you're enrolled as a full-time student at a designated educational institution for more than 13 weeks a year, unless on December 31st you have any eligible dependents. Like, let's say you're a single mom and you're a part-time student, right? So the rules depend on your profile. So that's the federal benefit. I'll just briefly explain the provincial benefit because I think this is the one everyone loves, which is the Ontario Trillium Benefits. The acronym is OTB. So just to explain what it means. So the combined payment, so it's a combination of the Ontario Energy and Property Tax Credit, the Northern Ontario Energy Credit, and the Ontario Sales Tax Credit. I find a majority of my clients benefit from the Ontario Energy and Property Tax Credit and the Ontario Sales Tax Credit. So the annual Ontario benefit entitlement is usually divided into 12. Okay, and the payments are issued on a monthly basis unless the total amount is less or equal to $360, and then you just receive a lump sum. Okay, now how are you eligible? I think that's the main question. You may be eligible if you live in Ontario, obviously, on December 31st for that tax year, and at least one of the following applies. 1, you paid rent or property tax for your principal residence in Ontario, which was paid for by you by the end of 2020, or in this case, 2020, you lived in a designated university, college, or private school residence in Ontario in 2020, and you were 18 years old and were living in Ontario at the beginning of the payment month. So remember the federal benefit of the Gst Agency, you need to be 19 years of age at the beginning of the payment month, but for the provincial one, you need to be 18. Another caveat regarding this particular benefit is that if you live in a designated university or college, so like a student residence, you're only eligible for $25 for the property tax, so Ontario Energy and Property Tax Credit, compared to someone who lived off residence. So it's it's a good distinction, and I like setting the right expectation, right? However, you still get the Ontario Sales Tax Credit, which is like automatically calculated based on your income. So that's just a brief overview of why you should file your taxes, because you don't really know if you're eligible for those benefits or not without filing your taxes for that year, right?
So what are some tax receipts that people should save before tax day? That's a good question. That's a very good question, because so many people are unprepared when it's time, right? So I'm going to break it down into personal income and then business expenses. So for personal income, the common ones are if you're a student, obviously your tuition receipts, tip or slips from employment and investment income. This again, usually employers are required to report this to CRA.
and every time you use CRA profile. If you have a CRA profile, if you don't, I also help in creation of CRA profile, and you just add it as an authorized representative, and you can just download all those forms from there. T4 slips doesn't apply to employment income. It also applies to like maybe you're a contractor and you get paid on commission, investment incomes as well, depending on the type of investment you have, and what type of like registered or non-registered accounts they're in. You also have RSP contribution slips, which you can also find on your CRA profile. Medical expenses, which you have to keep your receipts. What I recommend is still keeping paper. Every time you get the receipt, you can either request to have them send you a digital copy, or you just scan and send it to yourself, or send it to me. Charitable donations, childcare expenses, home office expenses, which is like a whole long list. And I think a lot of people don't really know what they can claim. And home office expenses would really kick in this year because of the pandemic, where people had to like purchase like equipment to work from home. So there's a whole different calculation that goes into what's eligible and what's not eligible, right? So that's more of a high level of personal income.
One popular question is, what happens if you get audited?
CRA conducts pre and post assessment. Pre-assessment could be like at the beginning of the new tax year, before the new tax year kicks in, or after the tax season ends, which would probably be like April for individual taxpayers and June for business owners and corporations. So how it works here is once you're done assessing your tax return, they'll send you a notice of assessment, and that would determine like just show your tax summary, any amounts you owe. But if you, for instance, let's say the common one is rent, right? So, or let's say you claim something that you can prove. CRA would tell, what they would do is they would calculate what your tax outcome would have been without those credits, or with the correct amount, and they would just calculate the difference between what you should have gotten versus what you received, and then they tell you to pay the difference. The downside here is that because this post-assessment happens after the tax season ends, which is April 30th, and by then the interest and penalties would have kicked in on any amount you're owing, so they'll backdate the interest and penalty fees you should have paid, right? So that's included on that amount. I know it sucks. However, on the plus side, what we do is we can call CRA on your behalf, and we can set up a payment plan for you. So you can start with a small amount and just like spread it out. Another option would be, so let's say for instance you get an income tax refund this year, and let's say you have a backdated payment you've been making for a while. You can call to have them apply that payment to, like say for instance, taxes owed, or the common one is like provincial benefits. So for instance, if you pay the wrong rent amount, you have to pay it back. So what you could do is, let's say this happened last year, and this year you're eligible for a different amount. So just take the difference, right? It's like, let's say you're going to receive $400 and you owed $200 from last year. Instead of receiving $400 this year, you could just pay $200. However, like CRA's groups are siloed in a way, in the sense that you couldn't just use your income tax refund to pay, like, let's say, Gst HST, you underclaimed, overclaimed because you were not 19, or you were not in the country, and you claimed you were in the country, right? So you can't just direct the funds to that group. You have to get the payments, and then you'll make the payment from your own end, right? So it's not very straightforward. It's very undaunting when you get that first letter. It's like, oh my God, I don't know what to do. You're not going to go to jail, okay? So I think that's the first time when you say, you're not going to jail, just call and we'll come up with a plan. We'll determine, first of all, where this is coming from to make sure it's aligned.
So when should someone use a tax professional?
That's a very good question. So in the past, I find that if you don't feel comfortable doing it yourself, don't do it. Right? I've had clients who started off with me because they just didn't feel comfortable doing it themselves, and I did it for them. And with time they realized, okay, maybe I could do this myself. And I've offered like ad hoc services where I walk people through how to prepare it themselves. I know it's, from a business sense, it's counterintuitive, but I think I started out this business to empower people, and be it by me offering a service or just educating them, I would just step in. I don't mind. But if it's simple, you can do it yourself and you feel confident in what you're doing. Even if you like, if this is the first time you're doing it and you don't want to pay for the service, I recommend you have someone who's skilled, like a tax professional, to look at it before you submit, right? Avoid any errors, especially like, for instance, you move province, right?
Yeah.
And I'm going to segue into when you should use a tax professional. So when your life situation changes, you get married,
Yeah.
you're earning more income, you want a tax plan, tax planning is key. You left the country for a while and you don't know how to deal if you're a resident. You want someone to handle all your tax matters, including auditing, any adult services you need, then just stick to someone that you can always contact at any given point in time, and they will just offer you that holistic service, right?
Yeah.
And then most people are just not self-starters and just don't want to handle those type of things. They want to focus on something else. And then you use a tax professional. Don't do it yourself.
Yeah.
Because you rush, right? And you just assume that you should be able to claim this because why not? But a tax professional will ensure that you're doing the right things because they also have something to lose as well, right? Because of credibility. And I find that tax professionals who are well versed in benefits also know more about other welfare benefits, like how to apply for EI. I got a lot of questions about the SERB, if my clients are eligible. And I find that I was able to provide value to those questions because when I had access to your previous tax years and could determine right off the bat, like your net income doesn't meet the $5,000 requirements, do not apply. If you apply, you receive this income, what is your plan to pay back? You have to pay back, right? So I really get them thinking about the risk involved based on the plans they indicated they might be interested in, right?
Yeah. Thank you so much for coming on here and sharing your knowledge about taxes. I know a lot of people will learn, like even people that have been here for like a long time. Most times people just don't understand taxes, they don't know how it works, they're just like, okay, let me just get my refund and that is it. Some people even think the refund is free money, but at the end of the day, the government was taking more than they were meant to take from you and they're just giving you the money back. In the beginning, I think it was free money because everybody's like, oh, it's free money, it's free money. But I just realized that no, it's not.
It's hard. If you're earning income in Canada, you need to deduct taxes. You also need to contribute to your EI, you need to contribute to your pension plan. No business owners don't know that. It does a shock. Or when it's time to, like, you have to make that separate payment to your pension plan. So, the entire system is like, you can map it out on a sheet, right? And you can kind of see where, like, how the money moves as I see it, and like you can start making tweaks on how you can plan, right? But yeah, thank you for having me. I don't really do this type of things, but I genuinely enjoy sharing the knowledge and solutioning. That's my thing. Like, I just love coming up with those solutions. Ensuring that my clients are really getting the best value for their buck. And seeing if there are other like adult services I can offer them or like refer them to if required, right? And I'm very passionate about just empowering them to grow, especially in Canada. It just, as a former international student, I know how difficult it is to actually establish good ties in Canada. Get a good job, figure out like how the taxes work, how like money works here. So I'm just grateful to be part of that process, the empowering process.
Thank you so much, and don't forget to reach out to Justina for the taxes. I'll leave everything in my description box. Check it out. I'll even leave like text here on the screen also. I have used Justina personally. A lot of my friends, like in Ottawa, a lot of people have used Justina also. So that one is like, I can beat my chest and say you should meet her for your taxes and everything is going to go smoothly. It's very affordable. Thank you so much, Justina, for coming on this channel to talk about taxes. And I know that is one thing that people are unsure about, so I'm glad Justina was able to help. And don't forget to reach out to her if you need help filing your taxes in Canada. And don't forget to subscribe to this channel, smash the like button so I know that you enjoyed the video. Don't forget to leave a comment in the comment section, and I'll see you in my next video. Bye.